It's the All Things Strange podcast. We are your hosts, Agent Anderson and
Agent Ether.
Come along as we examine UFO sightings, conspiracies, and all things strange. You can find all of our wonderful links in the description on the Linktree, where you can find our Patreon, our Discord, our merchandise, and more. This week's episode, Silver Shenanigans Part 2? What were we calling this? Silver Conspiracies?
Yeah,
I think that sounds good. Silver Conspiracies. Coming up with titles, you got to have something that's got a nice ring to it, right?
Yeah.
Silver Market Manipulation. It's a little wordy, so we'll do Silver Conspiracies. All right, before we get started, be sure to check out our Patreon. We've got 2 tiers for you. The first tier will get you after hours, early access, bonus episodes, the whole 9 yards. And the second tier will allow you to vote on upcoming episodes such as this one.
Yeah, our voters had this versus what was the other?
Cryptid Power Hour.
Cryptid Power Hour, which I think we're going to do anyways. We have a new agent, Agent Red, who wants to just come on for an episode. We welcome our listeners to join us. That's always a lot of fun. And she wanted to do a Cryptids Power Hour, specifically talking about Bigfoot. And then there's a cryptid near her that they have a festival for that she's going to attend this year.
Oh, cool.
Yeah, so she was really excited to talk about those 2 things and her theory about big feet and what they are. So stay tuned, and we'll make sure to get that out for you in a couple weeks.
Yeah, some people did vote for that, but more people voted for the silver one.
Right.
And I want to do that one. I wanted to start doing like a semi-weekly live stream where we just sort of, have a chat, just a loose discussion about stuff in general that we talk about. And instead of doing, in-depth research, we'll talk about recent UFO sightings or just a couple of strange news articles or whatever's going on in the world, that's weird. So I wanted to sort of do a live stream. I've had this idea for a while that I've wanted to do, and I think that'll be our first one with, what's her agent name again?
Agent Red.
Agent Red. Okay, that works. So yeah, that'll be fun. I have webcams and things ready to go, so we'll figure it out. But yeah, I don't know when that's going to happen, but hopefully sometime soon. All right, well, let's get right back into it.
So where did we leave off with the silver?
So I just discussed the COMEX market, COMEX, which is one of the biggest exchanges. Probably they have the corner on the silver market. They can control the prices, and they sell the highest volume of silver, paper silver actually, using futures contracts. All right, and I was reading quotes, not the whole article. I was reading excerpts from an article from APMEX, APMEX, which is one of the bigger places you can go online to buy precious metals. And they're an interesting source because they're in the game, so they have a particular perspective. All right, so I'll skip this one because we already talked about uses for silver, but the point they're making is that silver has a lot of industrial uses, and there's a high demand for it. So I'll skip that quotation there. And then I also did a quote from Wikipedia talking about other uses such as water filtration, ornamentals like jewelry, tableware utensils, stuff like that, photographs, X-ray film. But we already mentioned a lot of that stuff in the previous episode. So
yeah, if you didn't tune in to the episode last week, because that's part 1 and this is part 2.
Yeah, so we talked about the uses of silver, and so I'll skip that part as well. All right, here we go. Another quote from the article. A common factor mentioned when discussing the price of silver and supply and demand is the gold to silver ratio. The ratio is a formula for establishing how many ounces of silver it takes to buy 1 ounce of gold at any given time by taking the price of gold and dividing it by the price of silver.
Okay, so pretty straightforward mathematically.
Yeah, so 1 ounce of silver, or 1 ounce of gold buys how many ounces of silver is what we're talking about here. Investors who use this ratio believe that when the gold to silver ratio is high, the market is more silver friendly, so they increase the amount of silver they purchase during this time and vice versa. And I actually know somebody, I don't want to say their name, but I know somebody personally who has done this for decades, and they say they've done it fairly successfully. when the ratio gets really high, they will trade their gold for silver. And the dollar amount, the dollar price of any given thing isn't important here. The important thing is how much gold can you get for how much silver.
The ratio.
So they've been able to do this, and when the ratio gets really high, they trade their gold for silver, and then the ratio goes back down, and they can trade their silver back for gold, and they end up coming out ahead.
Again, not financial advice.
Right. I just know somebody who says that they've done this successfully. I did not audit their accounts or anything, but I believe them. So I have some historic numbers here that I found that were pretty interesting. In ancient Egypt, the ratio was about 2.5 ounces to 1 ounce. So 2.5 ounces of gold got you about 1 ounce of silver. And during the Roman Empire, it was about 12 to 1. Medieval Europe, it was about 8 to 1 to 12 to 1. So let's call it 10 to 1. So 1 ounce of gold bought you 10 ounces of silver. The United States in the early 19th century was about 15 to 1. In the 1970s, it was about 15 to 1 to 20 to 1. Now, in the year 2020, what do you think the ratio was?
2020. I'm trying to think about all the things we talked about. 2020, that would have been after the silver fix.
Yeah.
But before a lot of the trials came out. So maybe 200 to 1.
Not quite that much, but we go from, the 70s, 80s,
Right.
90s from being roughly 20 to 1. 2020, it's 120 to 1.
120 to 1. Okay.
In other words, silver relative to gold has become very, very cheap.
Now, what year was this?
2020.
2020. So that was some time after the big market crash.
Yeah.
That's recent. That's very interesting.
That's very recent. And today, the silver ratio is about 90 to 1. So we go from, for a long time, the ratio has, been 20 to 1 or something like that. And then all of a sudden, we have 90 to 1. So another way of looking at that is the price of gold has gone up by quite a lot, and the price of silver has not. And a lot of people find this very suspicious because the demand for gold is just as a storage of value and for jewelry and things like that. But there is a very high demand for silver for like industrial uses and things like that. So a lot of people find it suspicious that the price of silver has stayed more or less the same. It's gone up a little bit, but not that much.
Even while the demand has increased.
Yeah, the demand has increased and it continues to increase, whereas the price of gold has skyrocketed compared to the price of silver. And just look at it. They have charts for the gold to silver ratio, and you can see it looks, like sometimes they'll say it's gone parabolic. It kind of looks like that. The price relative to one to the other doesn't really make a whole lot of sense.
And yet you have to wonder if one of the reasons is because people are fleeing other markets and going into gold because of the rampant inflation that's going on. And I know I don't want to talk about politics here, but a lot of Democrats are like, the economy is stronger than ever. Well, my eggs are like $6 for a dozen eggs. It is ridiculous. So we have rampant stagflation, actually.
Yeah.
So we could argue, that this whole silver conspiracy actually is just people fleeing other markets and going into gold, which has been a known standard for value, storage of value.
Yeah.
Just playing the devil's advocate here.
And let's go over some historical data for gold prices, just real briefly.
Yeah.
So the price of gold, let's say in 1954 was $35 an ounce, right? And let's see, this chart is really weird, the way they have it divided up. It's hard to read. Anyways, so 1965, $35 an ounce. 1970, let's go back down here. Okay, 1970, it goes all the way up to $139 an ounce. And if you're familiar with the time period, there was stagflation in the 70s. That's where we get that term from. And prices inflate. There's massive inflation. They jacked up interest rates to try to tamp down on it. Interest rates were like 20% at one point.
Yeah.
Could you imagine if you could get a 20% return on just sit your money,
like bonds or something?
Boom, just plop your money down, get 20%. I would put everything in there and I would get like 3 jobs and just put it all in. 20% is so much. That's so much. Anyways, 1985, it goes up to $327. 1995, it goes up to, 95 is over here, goes up to $387. 2005, it's 500. 2015 is $1,000 an ounce. And now gold is about $2,500 an ounce. So
that is insane.
As you can see, the price was pretty stable for a while, but starting in the 70s, the price pretty much skyrocketed. And we could boil this down and look at also compare it to like inflation and the value of things or whatever. That's a whole other episode, so I don't want to get too much into that. All right, now just to compare that to the price of silver, let's start, I don't know, in 1918. Ooh, there's a good year for you. The price of silver was about $20 an ounce.
Okay, okay.
About 100 years ago. All right, now let's fast forward to, let's say, 1950. Price of silver, about $10 an ounce in the 50s, right? In the 60s, about $10, $11 an ounce. We have a huge spike in 1968-ish. It goes up to $20 an ounce. Then it goes back down in the early 70s. It's like, back in the 10s. And then we have another huge spike. Let's see, right here in December 1979, the price of silver goes all the way up to 123 or so. I'm going to talk about this in a little bit.
Okay.
There's a reason why it spiked this much, but it goes up all the way over $100. And then over time, it goes back down. And then by 1990s, it's all the way back down to $10 an ounce or so. By the year 2000, it's down to $8 an ounce. So keep in mind, we're almost 100 years here, and it's about the same as what it was 100 years ago. The price stayed the same. And it goes up a little bit. So in 2010, it's about $20, $25 an ounce. And the current price is about $30 an ounce, more or less. So over a period of 100 years, the price of silver has not really changed that much. Kind of weird. The price of gold has gone up a lot. The price of silver, not that much. Pretty weird numbers there going on. I mean, it does support the idea of a price manipulation because everything has gotten more expensive over the past 100 years by a lot, except for silver, which is more or less the same. I mean, you could say, a 30% increase is a lot, but compared to other things that have increased by a lot, not that much. All right, now I wanted to talk a little bit about what a futures contract was. Well, actually, I'll skip all this because I did already discuss that. I did discuss a little bit what a futures contract is and what you want to do, so I'll skip this part. But a futures contract is a derivative. And in finance, a derivative is a contract that derives its value from the performance of an underlying entity. The underlying entity can be an asset, index, currency, or interest rate. And it's often called the underlying. Derivatives can be used for a number of purposes, including insuring against price movements or hedging, increasing exposure to price movements for speculation, or getting access to otherwise hard to trade assets or markets. So there are a lot of legitimate uses for derivatives. And especially futures contracts, there are legitimate uses for that. But in silver, we have a situation where the market has become completely detached from the underlying asset. Nobody takes physical delivery of silver. When you're having a future contract, the original idea was that you'll take delivery for that underlying product in some point in the future. Whereas in silver, nobody ever takes delivery of that product. And if they wanted to take delivery for those future contracts, they would not be able to because there is not enough silver to go around. We discussed this in the last episode. But I find it interesting that futures contracts for silver have become so detached from the underlying asset that it's basically more like going to a casino and putting money down on the table than it is buying the underlying asset. You're no longer buying the underlying asset. You're gambling on the price of the underlying asset.
Yes. Yes, that's very true.
It's really kind of a strange thing.
I don't understand all of what you said about futures, and I consider myself not savvy, but knowledgeable when it comes to financial things. But yeah, it's gambling.
Yeah.
Futures, options trading, I would never get into those things because I have no confidence in myself as a gambler.
Well, and I wouldn't have any I wouldn't have any confidence that the markets are not rigged.
Right.
For instance,
just like at a casino.
when they so I don't want to get into options too much, but sometimes I keep an eye on these things when they are developing just because out of curiosity, right? So when they first opened up options trading for Bitcoin, the way an options contract will work is it's similar to futures where you have the right but not the obligation to buy a certain underlying thing at a certain price at some point in the future. So if you buy an options contract to buy Bitcoin for this price at this date in the future, if the price is below then that point, then you lose money if you buy it. If it's above that point, then you can buy it and resell it into the market and make a profit. But I noticed that, CME, we talked about them previously. CME, they're the ones doing the Bitcoin options. I noticed that I think it was every other Friday, the options expired. Every single expiration date, the price would expire somehow mysteriously would expire underneath the options strike price or whatever they call it. I'm not sure about the terminology, but I thought that was a little bit suspicious that, at least when I followed it for a few months when they first came out, I just found it interesting that the options price was never met for Bitcoin when it first came out for months. They would fall below the price every single time. It's crazy. But anyways, maybe I should read this little bit on future contract. If it's not clear to you, maybe it's not clear to other readers. So I'll read through this little bit from Wikipedia. A futures contract, sometimes called futures, is a standardized legal contract to buy or sell something at a predetermined price for delivery at a specified time in the future between parties not yet known to each other. The original use of futures contracts mitigates the risk of price or exchange rate movements by allowing parties to fix prices or rates in advance for future transactions. This could be advantageous when, for example, a party expects to receive a payment in a foreign currency in the future and wishes to guard against an unfavorable movement of the currency in the interval before payment is received. Or like the example I used last episode, if you're a farmer and you're producing corn, you have a minimum price you need to pay your bills and make a profit so that you can pay for your own, whatever you need, your house payment, whatever it is, people need to make a profit so they can earn a living. So if you are growing corn now, you're going to need to sell that corn in the future, let's say 6 months from now. But 6 months from now, the market may take a dump and may go below the price that you can make a profit on. So you're going to take a loss that year, and that can cause you might lose your farm. So a future contract would allow you to sell your stuff now for a price you'll be able to keep running your business on. So that's another use for a future contract.
So that makes sense to me. What happens is when you start talking about things that aren't intrinsic, things that aren't physical.
Right.
So you start talking about paper, silver, and then my mind kind of goes somewhere else. I'm like, this makes no sense to me. Like, how can you trade something that doesn't have that physically isn't sitting somewhere
right
at 1, 2, 3, 400 times its value?
That's what I'm saying. That the idea of a future contract, you buy the future contract, that allows you to take delivery of that product in the future for that price. But
you're never taking delivery.
But nobody takes delivery for maybe a handful of people take delivery, maybe some industrial players who they know that they have to produce this item in 6 months or in the future or whatever. They'll buy a futures contract and take physical delivery. But the vast majority of futures contracts, nobody ever takes physical delivery.
Isn't this for all commodities?
It's pretty similar, yeah. I didn't look up the numbers for all commodities. I doubt that very many items are at a 300 or 400 to 1 ratio for futures contracts. I very seriously doubt that's the case. But like I said, for silver, there are so many futures contracts being printed that if they all wanted to take delivery for that product, they would not be able to. Like I said, it's completely detached from the underlying asset. The silver doesn't exist for all these contracts being printed. That's not the way futures contracts are not supposed to work that way. You're supposed to be able to take delivery for the product or underlying asset, but that they can't. The silver doesn't exist. It's not what they call above ground silver. It's not there. It doesn't exist. It's so crazy. It's so wild. Anyways, continuing on with this definition from Wikipedia. However, futures contracts also offer opportunities for speculation in that a trader who predicts that the price of an asset will move in a particular direction can contract to buy or sell that item in the future at a price which, if the prediction is correct, will yield a profit.
But somebody has to agree to that.
Right. There has to be a counterparty, yeah.
Okay.
In particular, if the speculator is able to profit, then the underlying commodity that the speculator traded would have been saved during a time of surplus and sold during a time of need, offering the consumers of the commodity a more favorable distribution of commodity over time. But again, the underlying idea is that if you buy a contract, a futures contract, that underlying commodity is sitting in a warehouse somewhere and you could actually take delivery for it. That's not the case for the silver market. That silver is not sitting in a warehouse somewhere. You cannot actually take delivery for it. It's wild. So there's a lot more to it. There's a whole Wikipedia article on futures and futures markets. Like, it's really long, actually. So you can go read more on that if you'd like. But that's just a little blurb. Hopefully that helps us get an idea of what futures contracts are, what they're supposed to be used for, and how they're not really being used for that in the case of silver. Does that make a little bit more sense, Agent Ether?
Yes, it does. Thank you for clearing that up.
All right, so it should be pretty obvious how derivatives can be used for shenanigans. Maybe at some point in the future, it's on the list. We'll talk about the 2008 market meltdown. That was a derivatives meltdown. But in general, if you have an exchange that's not regulated issuing derivatives contracts, it's pretty easy for them to get up to shenanigans and manipulate markets and do stuff that's not good for certain people, but it's good for them, you know. But so we have the point of all this is that we have the potential for manipulation. We know it's possible, and we have evidence that it's actually happening. So if you have a 300-to-1 ratio, clearly something is wrong there. That's not what futures are for. They're for buying and selling actual goods, but we have a situation where that's not actually happening. You're trading paper, not the real thing, and almost nobody takes delivery. So the contracts are not tied to specific things, and it appears that these exchanges, or COMEX specifically, it appears that they are just printing paper, not mining silver. Now, keep in mind, this is all alleged. I'm not making any accusations here because I'm sure COMEX has much better lawyers than I do.
That's a good point.
So I'm not saying that this is a fact. I'm just saying that this is one of the conspiracies out there that other people believe. I don't believe this nonsense. It's all just not like, this is weird stuff. You'd probably have to be wearing a tinfoil or aluminum foil hat to believe in all this stuff. It's all nonsense.
It is ironic that you would say that. I cannot wait until I talk about this next case, because it's quoted in there that the tinfoil hat people were right.
Yeah.
In the newspaper article. It's hysterical.
I'm not one of those people. I don't have a podcast about conspiracies or anything, but it's crazy, man. This stuff is crazy. So the markets appears to be heavily diluted is the whole point of this. And just imagine if you have 10 silver coins in existence, but because of, like the fractional reserve banking system, you have 1,000 coins on the market, but only 10 exist. That's going to lower the price, right? It devalues the underlying asset. So that's basically in a nutshell about like the futures and all the paper and all that stuff. I just wanted to mention once again, Agent Ether mentioned it in the past, that the ratio of silver to gold mined is about 8-to-1, roughly speaking, 8-to-1.
7-to-9.
Something in that, somewhere in that ballpark. But given the 8-to-1, let's just call it 8-to-1, just for the sake of convenience, given the ratio of 8-to-1, silver is in a high demand and it's mined at about a ratio of 8-to-1. Shouldn't the price be a lot closer to that ratio, given that there's a demand for it?
That's a really good point.
It shouldn't be at 90-to-1 or 100-to-1. That is a very suspicious number. That doesn't prove anything in and of itself, but it does kind of raise my suspicions that the price of silver is way out of line versus the price of gold and how much is available, right?
Yeah.
In other words, the price of silver is way cheaper than you would expect on a fundamental level. Again, that doesn't necessarily mean anything. It's just kind of weird. Now, just for reference, if the price ratio was 8-to-1 instead of like 90-to-1, silver would be worth approximately $320 an ounce, give or take.
Which is reasonable.
Yeah.
That's so reasonable.
It's worth, like I said, it's about $30 an ounce, give or take, which is just insane. You can go buy for $25,000 of silver, you fill up your whole closet, not really, but still you could buy stacks and stacks of silver for what you can get for the same price in gold. Like, it's crazy.
On the other hand, silver jewelry, which is very nice, tends to be relatively inexpensive.
Yeah.
So that's kind of nice.
That is nice that you can buy silver jewelry for pretty cheap. But I mean, just think about 1 ounce of gold, $2,500. You can buy a big block of silver for about that price, $2,600, whatever the price is today. I don't know. It fluctuates, but it's like $2,500, $2,600 for something like that. It's just kind of strange. And another thing I read, I don't know how true this is. I didn't have time to look into all the ins and outs of it, but I read that silver is so cheap that you can't actually make money mining silver itself. So you can't just mine silver. It's too expensive. You'll lose money. Like Agent Ether said in the last episode, most silver is produced as a byproduct of mining something else.
Copper, for example.
Yeah, for example, is one of the bigger ones, which is interesting because copper is relatively cheap compared to silver, but it's also a lot more abundant and probably a lot easier to mine. But that would be a whole other rabbit hole. Just how do they mine it? What is involved? It's, from what I understand, when they process, use chemicals to process copper, they get a little bit of silver left over, and that's how they get most of the silver. But I mean, if there's such a high demand for silver, why is it so cheap? I don't know. All right, so that's basically the background stuff, the market stuff I wanted to talk about. And at the end of the day, I spent a lot of time reading up about the markets, how they work, how prices are determined, and I was not able to really get a firm grip on why the price of silver is what it is, what the factors are. Like I said, wibbly wobbly, right? It's really hard. Nobody really knows. Why is the price of silver what it is? It's hard to say, but we can speculate that it might have something to do with that 300 to 400 to 1 ratio. Possibly might be a factor. I don't know. All right, let's get into some specific cases, because we wouldn't want to talk about silver and not talk about specific cases of manipulation. It's not all just speculative, is it? It's not all just, well, it looks like it's happening, so it's happening, right? Do we have specific examples of silver market manipulation?
Yes, we do. I have some examples. And mind you, these are not all the cases. These represent the ones that I found the largest cases and settlements that have been processed over the last, let's say, 20 years. Right.
And like I say this a lot on these episodes, but this legit could be a 10-part episode easily.
Yeah.
All righty, Agent Ether, what do you got for us?
Okay, from goldbroker.com, 2016, so a while ago, is shaping up as the year when countless conspiracy theories will be confirmed to be non-conspiracy fact. From central bank rigging of capital markets to political rigging of elections to media rigging of public sentiment and now commercial bank rigging of silver. In short, tinfoil hat-wearing nut jobs living in their parents' basement have been right all along.
Why do they have to be living in their parents' basements?
I don't know, but that's what I said. It's really funny because that's in the article.
Yeah, that's hilarious. And I would just like to say, I live in California. I've lived in California my whole life. I've been to a lot of people's houses, and not once have I ever been to somebody's house with an actual basement.
Oh, that's a really good point.
I've never seen a basement. Maybe that's a Midwest thing or wherever tornadoes are.
Because of tornadoes, yeah.
Who knows?
Yeah. So, same article, goldbroker.com. 2 weeks ago, we reported that in a major victory for gold and silver traders, manipulation lawsuit against gold-fixing banks ordered to proceed. However, one bank was exempt, the Deutsche Bank, which we mentioned in the Silver Fox.
Yeah.
Silver Fix.
Silver Fox, whole different thing.
So the reason why was known since April, when we reported that Deutsche Bank had agreed to settle a class action lawsuit filed back in 2014, July specifically, accusing a consortium of banks of plotting to manipulate gold and silver. Among the charges that Deutsche Bank effectively refused to contest, in other words, they didn't necessarily plead guilty, not guilty, were employment of a manipulative device, big rigging and unjust enrichment, price fixing and unlawful restraint, price manipulation claims, and aiding and abetting principal agent claims.
And isn't that so frustrating that in all of these cases, the bad actors, they're like, oh, well, we'll pay the fine, but we're not going to
We're not going to admit that we were wrong. We're
but
settling.
we'll pay the fine, though.
So Deutsche Bank had previously agreed to pay $38 million to settle U.S. litigation over allegations that it illegally conspired with other banks to fix silver prices at the expense of investors. The settlement, disclosed in papers filed in the Manhattan Federal Court, concludes one of many recent lawsuits in which investors have accused banks of conspiring to rig the precious metals markets.
And that might seem like a hefty penalty, but I read somewhere, and I didn't have time to verify this, but I read somewhere in a discussion that the silver markets, more silver trades every day than actually exists, that trades back and forth between, market participants. So if you think about that, how much silver is trading back and forth every day, at least digitally or on paper, that penalty is probably just a small fraction of what they were able to make by manipulating the markets.
So this is just such a good article that I'll just continue to read it.
Yeah, go for it.
While the amount is tiny for the German bank, now that it is enshrined in case law, it will unleash dozens of similar class action lawsuits, each tweaked a little and each demanding tens of millions from the gold and silver rigging banks. As Reuters adds, Reuters being another news outlet, the settlement had been expected since April, though the terms had yet to be disclosed. In court papers, lawyers for the investors say the deal will likely be a, quote, icebreaker, unquote, that will serve as a catalyst for other banks to settle. So setting a precedent there.
Right.
Vincent Briganti, a lawyer for the investors, said the deal provides, quote, substantial monetary compensation plus cooperation from Deutsche Bank in the continued prosecution of this important case against non-settling defendants. So, as a reminder, investors claimed Deutsche Bank, HSBC Holdings plc, and the Bank of Nova Scotia, Scotiabank, rigged silver prices through secret daily meetings and accused UBS AG of exploiting the fix. The alleged conspiracy started in 1999, suppressed prices on roughly 30 billion of silver and silver financial investments traded each year. 30 billion.
Yeah, that's a lot.
And enabled the banks to pocket returns that could top 100% annualization, the investor said. The judge is quoted as saying, "We have reason to believe that there are at least hundreds of geographically dispersed persons and entities that fall within the settlement class definition. The settlement class includes traders of the COMEX, is it COMEX?
Yeah. Silver
futures contracts, and anyone who traded in physical silver based on the silver fix, and traders in various silver derivatives. The other beneficiaries being, of course, the class of investors, people, and conspiracy theorists who claimed all along that gold and silver were subject to rigging in various forms throughout the years. Well, says the article, you were right. However, we wouldn't hold much hope for getting any substantial monetary rewards. By the time the settlement is done, there will likely be a few $100s per claimant." The good news is that this will unleash many more lawsuits now that the seal has been broken.
So wait, each claimant gets a few $100s for a multi-billion dollar...
Billions.
So, I mean, let's say hypothetically you did your research and you determined, the price of silver will go up a little bit, so you put a bunch of money in there. And let's say you're an institutional investor managing money for, lots of people, like a pension fund or a mutual fund, whatever. And you invest, tens of millions into something, and then the market's rigged and you lose a bunch of money because of that. Not because you made a bad investment, but because the market is rigged, you get a few $100s. That's fantastic.
Yeah. So that was in 2016. So let's fast forward a little bit in time to 2020. There's a press release, and I got it specifically directly from the U.S. Department of Justice website.
Okay.
So the Bank of Nova Scotia, Scotiabank, I don't know if I'm pronouncing that right. Probably not.
I think it's Nova Scotia.
Nova Scotia. So the Bank of Nova Scotia, Toronto, Canada-based global banking and financial services firm has entered into a resolution with the Department of Justice to resolve criminal charges related to a price manipulative scheme involving thousands of episodes of unlawful trading activity by 4 traders in a precious metals futures contract market. And they're going to pay $60.4 million in a criminal monetary penalty, criminal disgorgement, and victim compensation, with part of the criminal monetary penalty credited against payments made to the Commodity Futures Trading Commission under a separate agreement being announced today. And the Department of Justice is quoted as saying for over 8 years,
Right.
Scotiabank traders placed thousands of orders for precious metals futures contracts in an attempt to manipulate prices for their own and the bank's benefit and to deceive other market participants. And this is from Chief Robert A. Zink of the Justice Department's Criminal Division Fraud Section. He goes on to say, this deferred prosecution agreement, which includes a criminal monetary penalty, at the top of the United States sentencing guidelines range, money to compensated victims, and an independent compliance monitor, reflects the seriousness of the offense and the state of Scotiabank's compliance program, and further helps to promote the integrity of our public markets. For the markets to work fairly, everyone needs to be able to make trading decisions with consistent and accurate information. U.S. Attorney Craig Carpenito for the District of New Jersey says, in the conduct described here, 4 traders attempted to rig precious metal future contract prices in their favor. And we've already talked about some of this. They illegally manipulated the market to their advantage. And the resolution required Scotiabank to pay substantial policies and place them under watch by an independent compliance monitor. They actually admitted to their role, unlike Deutsche Bank.
Right.
They admitted to their role in massive price manipulation. And let's see.
So what you're saying is that not only are the suspicions true, but somebody actually
They
got
admitted
busted
to
for it.
And they got busted for it.
So what you're saying is that the silver market manipulation is real. We have proof that the market has been actually manipulated. So all of those suspicions, when you look at the price discrepancies and you think these prices don't look right, it looks like the price for silver should be a lot higher. We have actual proof that that happened.
We do.
And I would just say one more thing, that just because they got caught for doing this for 8 years, what I would argue, well, my suspicion is that they got caught for it in this particular instance, but how many instances are there that they didn't get caught for, right? Mm-hmm. Because if you think about somebody who's committing a crime like shoplifting, stealing cars, whatever, do you think they get caught the first time they do something? If they get caught for one thing, they probably did many other things that they didn't get caught for.
It's very true. It's very true. So I guess what would happen is they would place thousands of orders to buy and sell precious metals futures without the intent to cancel those orders before the execution. Isn't spoofing?
Wait, with the intention to cancel?
With the intent to cancel these orders before execution, yeah.
Yeah, that's spoofing. So just a reminder of spoofing. I talked about it during my high-frequency trading episode. Basically, what spoofing is when you put a large order on the market, which other market participants will notice, and it will move the market. So if you put a buy order below the current price, if you put in a buy order for, let's say, $50 million of whatever it is, that will cause the market to go up because other participants will see that somebody's about to buy a crap ton of whatever it is. But spoofing is when you put in a large order to buy or sell something without the intention of actually following through with that order. In other words, you cancel the order before it can execute. And that can be used, and is used to manipulate the market all the time. I could go on a live feed and I could show you level 2 quotes, or I could show you go on Coinbase and look at their live market action going on. I think they call their pro platform something else where you can actually see the buying and selling. I can show you in real time the constant use of order spoofs. I imagine it's somewhat difficult to prove that somebody's actually spoofing orders. And it happens so rapidly and so often that it would be a mess of data to even analyze it and figure out what's going on. I think it'd be extremely difficult in a court of law to prove that an order is a spoof, because you could say, oh, well, my finger slipped. I didn't mean to do that. Or,
I
hey,
changed my mind.
I changed my mind. Yeah. Something like that. Right.
But here traders it's artificial.
Yeah.
When you do this, they're artificially moving the prices of precious metals, like including platinum, silver, gold, in futures contract in a direction that was favorable to them, and then injecting false and misleading information into the markets at the same time.
Right. And I would just as an aside, I didn't have a chance to look into this, but platinum is actually more rare than gold, but it's about $1,000 an ounce. I'd have to check, but it's way cheaper than gold, even though it's more rare. There might be other reasons for that, like less demand or something, but that just wanted to throw that out there. Maybe it's not. Maybe it's being manipulated.
So how did they get caught?
Yeah, that's a good question.
How did they get caught? In 2016, after one of its futures commission merchants, so a participant in the market, flagged trading by Flaum for possible spoofing, there was an investigation. Scotiabank made a voluntary disclosure regarding Flaum to the CFTC. And so they said, okay, all right, we'll take care of it. But as a result of record-keeping failures, and I will put my fingers in the air
right.
and quote that.
What happened? We can't find those records anywhere.
It was materially incomplete.
Yeah.
So they submitted this report, but it was not a complete report. So as a result, the CFTC was impaired in its ability to fully investigate Flaum's unlawful trading and discover the true extent of the misconduct. So it was relying on these incomplete and inaccurate disclosures before it entered into a resolution in 2018 that did not fully reflect the extent of Flaum's conduct. So in 2018, Scotiabank received a substantially reduced penalty because of its self-reporting. But now, after that, the CFTC announced 2 separate settlements with Scotiabank in connection with related parallel proceedings. And that included relating to unlawful trading by Flaum and 3 other traders who aren't disclosed in connection with the investigation.
Now, how wild is that? Imagine that you stole a car, the cops come, they find the car in your driveway, and they ask you, did you steal this car? And you'd be like, I don't have any record of that. It didn't happen. And then you get off for it, or at least less of a penalty. That's so crazy.
The penalty included a civil monetary penalty of $42 million, as well as restitution and disgorgement that will be credited to any payments made to the department. There was a second resolution that related to the false statements and connection to COMEX and the National Futures Association, which was an additional civil monetary penalty of about $17 million.
17 million. Sounds like the cost of doing business.
For $60.4 million total.
Yeah.
Which is probably like nothing.
Yeah, that's
it's like a drop in the bucket.
Well, like we said, they're manipulating multi-billion-dollar markets here. So their profits are probably far in excess of the penalty. It's almost like they're just giving them a free pass. Okay, keep doing this. We'll keep collecting an occasional penalty. Everybody wins. The organization that collects the penalty, whatever government regulatory agency, they get millions, tens of millions. The place who's doing it, they just have to pay a small fine, and they get to keep making who knows how much money.
So I saw a lot of quotes when I was looking at these cases, these 2 and others specifically, from the government, from these watchdog agencies, saying this will teach them a lesson. People will be reluctant to do this again.
Yeah, I'm sure they're never going to manipulate anything ever again.
And so very recently, I found another case, August 2023.
Okay, before you do another case, I want to get into the case I was talking about earlier, why the price spiked to 1970.
Oh, yeah, go for it. Very interesting.
Silver Thursday. So this is why, remember I mentioned earlier the price spiked to over $100 and I was going to talk about it?
In the 70s? Is that
this is saying? It. Yeah, 70s. This is a really interesting case. I put it on the list. I might do a full case on this, maybe a bonus episode at some point in the future. But just to go over it briefly, Silver Thursday, this was when the Hunt brothers. So we have Nelson Bunker, which I like that name. Who names their kid Bunker? Bunker. What kind of name is that? It's weird. I don't know. William Herbert and Lamar Hunt, or the Hunt brothers, they tried to manipulate the price of silver. And this is a really, really interesting case. Now, basically, the Hunt brothers had oil money. They were really rich. They were billionaires. And they wanted even more money because
shocking.
Why not? That's what you do. So they bought a crap ton of silver, both physical silver and silver futures. From January 1st to January 18th, 1979, the price of silver spiked from $6 an ounce to $50 an ounce. So it went up like really quickly to really high. And then at some point, like I said, it went over 100 briefly. It's estimated that the brothers held a third of the entire global silver supply that was not held in government vaults. A third. They were able to buy that much silver. And their idea is basically, hey, if we buy it all up, we control the supply, we can raise up the prices, right?
It wasn't just them too, though. It was also investors, right? They had investors.
Yeah, well, I don't know. I didn't see that they had investors, but they were definitely financing it. It was not
That's
just
a good point.
money.
Yeah, they were financing it.
So Tiffany's, Tiffany Jewelers.
Oh, Tiffany's, yes.
You
are welcome to buy me stuff from Tiffany's anytime,
okay.
Just so you know.
I'll see. It might not be in our price range. I don't know. Do they sell fake Rolexes there?
No, their jewelry is very expensive.
Okay.
Very expensive. But every girl likes Tiffany's. What can I say?
Well, I'm sure they do. So Tiffany's actually even took out an advertisement in the New York Times. The ad said, "We think it's unconscionable for anyone to hoard several billion, yes, $billion worth of silver and thus drive the price up so high that others must pay artificially high prices for articles made of the silver." And you imagine you could buy like a silver necklace for like what, $50, $100? They're not that expensive. And, if they're driving the price up so much, that's going to make that necklace go up a lot in price as well, because it's an end product, right?
Yeah.
So on January 7th, 1980, the COMEX exchange enacted silver rule number 7, which greatly limited how much a person or a participant was able to buy silver or silver futures on the exchange on margin. So in other words, they limited how much leverage you could use. So after they did this, of course, silver prices trended downwards naturally. Now, of course, the brothers...
How quickly did they trend downwards naturally?
I'd have to look.
Would you call it a crash?
Yeah, it would
because
definitely
I would think it would...
Yeah, definitely
there
a
would
crash.
Be panic selling.
Right.
And
yeah,
also,
sure.
if they can do this with one market commodity, what's to prevent them from doing it with other market commodities?
That's the punchline, right? But we're getting a little ahead of ourselves.
I know. I was just thinking ahead.
Yeah, we could talk about the comedy night line. Speaking of punchlines,
okay,
we'll do that for after hours, maybe. But so they enacted silver rule number 7. The brothers were heavily leveraged, so when the price started to decline, they started to get margin calls, and they were completely wiped out. Their loss was so big that it posed an existential threat to the whole system, because they were buying these things on margin, like billions of dollars of loans, essentially. So if they couldn't pay back those loans, it would put whoever they borrowed the money from would go out of business, and it would be a domino effect, just like what happened in 2008. One participant failed, but they owed money to all the other participants, so the other participants were no longer liquid, and they would have all failed as well. So it could have caused a 2008 like event where you'd have this domino effect of participants all getting wiped out. That's how heavily leveraged they were. And again, it begs the question, why were they allowed to borrow so much money if they wouldn't be able to pay it back, would cause a failure in the system? Like it makes you think that our system needs to be more carefully thought out to where a single participant can't bring down the whole system. It's just kind of scary, So, because of this, they got a special bailout from a group of banks to help them cover their loans.
Well, that makes sense because they had borrowed money from the banks.
Yeah, but it's also very frustrating for the average person, especially in today's day and age where there are more and more homeless people who are losing their houses every day because they can't afford to pay their bills anymore. Where are their bailouts? We're talking about people who pay taxes their whole lives, and then when they need something, they just get the middle finger from the banks or whoever. If you're a billionaire and you're getting wiped out, you're like, oh, no, here's more money. We don't want you to get wiped out. The little people that make this country work or that make the world economy work, nobody cares about them. But the big players, they can't lose. They cannot lose. They have this insurance that eliminates what you might call moral hazard. But let's not get into that too much. But
oh, hey, this silver market crash was on my first birthday.
Oh, nice.
Oh, so that's amazing.
Yeah. Pretty cool stuff, I guess. So anyways, they got a special bailout to help them cover their loans using some of their other crap as collateral because they were billionaires, so they had a lot of crap for collateral. And like I've said before, if you're going to do bad stuff, go real big. Don't do any of this peasant stuff and steal like $1 million. You got to go in the billions. If you steal billions of dollars, you'll be fine. You won't go to jail for that. You go to jail for stealing a pair of shoes, though. Anyways, the brothers ended up losing around $1 billion for this fiasco, but they were still rich. They were fine.
They filed bankruptcy, but did they go to jail? No.
By 1982, the price of silver was all the way back down to $5, give or take. In 1988, so keep in mind, they did this in what did I say, 1979?
1980 was the Thursday crash. So 79.
79, 80. So almost 10 years later, in 1988, the brothers were found responsible for civil charges of conspiracy to corner the market in silver. So here we have a real life conspiracy, people. See, conspiracies do happen, right? Here we have proof of it. They're real people. They were ordered to pay $134 million in compensation to a Peruvian mineral company that had lost money as a result of their actions. This forced the brothers to declare bankruptcy in one of the biggest such filings in Texas history. So almost 10 years later, they're penalized for something. Just imagine that. If I go to the store and I shoplift, $1,000 of electronics from Best Buy or wherever, do you think they're going to give me 10 years before I have to face any penalty for that? No. But if you're a billionaire and you steal money from millions of billions of dollars or whatever, you basically just get to chill on a desert island or a tropical island, I should say, somewhere for a decade until they finally catch up to you. And then you could just declare bankruptcy, keep all your crap. They didn't go to jail. They declared bankruptcy and then they didn't have to pay the fine. And their big slap on the wrist was they weren't allowed to trade anymore. Right.
You're not allowed to do this again.
Right. Don't do it again. We're super serious. Don't do it again. So they were still rich. They were still fine.
It was civil litigation. It wasn't criminal litigation. Yeah. And because their actions were deemed manipulative, but they could find no criminal wrongdoing.
Yeah. And I don't know, it's just kind of frustrating as an average individual that actually has to face real penalties if you break the law to see people get away with this kind of stuff.
It's just crazy to me because they were operating within the limits of the law. It was unethical.
That's a good point.
It was destabilizing, but technically it wasn't illegal. It wasn't until after this occurred that regulators would go on to impose stricter rules.
That's actually a really good point. I hadn't thought about that.
So it wasn't illegal.
Technically, they shouldn't have had to pay any sort of penalty. So I take it all back. They weren't bad guys. They didn't do anything illegal.
They were bad guys. I think they were. What they were trying to do is what a lot of people are trying to do. They're trying to get rich, but the way they did it was unethical, but technically not illegal.
Yeah. And there's a I don't know, there's a right way and a wrong way to do things, right? But if you're doing something like this, it's kind of like you're cheating. It's like a cheat code.
For a video game.
If you're rich enough to buy everything, like if Warren Buffett or Bill Gates or Jeff Bezos, if they're like, okay, I'm just going to buy all of the silver in the world, like they might have enough. I don't know how much silver is there. They could probably buy at least a third of the silver. They could buy a lot of it, drive up the price, but it would probably be considered unethical. And that's what these people tried to do. So anyways, the interesting takeaway, the punchline to all of this is which you spoiled earlier, Agent Ether.
I'm sorry, it just came to me.
Is that COMEX saw them trying to drive prices up in the market, and they were more than happy to manipulate the price of silver and crash the price of silver. Like I said earlier, COMEX is like De Beers. They pretty much control the price of silver. They were successful in their efforts to counter something that they didn't like. So in other words, they manipulated the market. Market manipulation is real based on this case and can be done both by bad actors like the brothers or by the markets themselves. So it is possible. It has been done. We know that it's been done.
Yeah.
So that's just an interesting takeaway. To me, that's the most interesting thing. Not that the brothers tried to make money, but that both the brothers did successfully manipulate the market. They just didn't get out soon enough. And COMEX successfully manipulated the market downwards. And it's kind of weird though. Like I remember we were talking the other day when we were reading about this, about why you'd want to lower the price, because if you're like what is it? SLV is the biggest ETF that trades silver, that actually holds physical silver. And they do a fee, like 0.5% fee, a management fee, because they don't need a huge fee to just hold silver. So it's a pretty low fee. But the higher the price of silver, the higher their management fee, the more money they make. But there is evidence that SLV is a participant in keeping the price low. Why would they do that? Well, let's not get into the further discussion that they are actually an ETF owned by BlackRock. That's a whole other can of worms. But I don't know. This whole thing is just so weird. But all right, that's the Silver Thursday fiasco or case, and there's a lot more to it, and I might actually do a full bonus case on it at some point in the future, or who knows, a regular case. But that's what I had for that one. All right, Agent Ether, you got some more case files for us?
I have one more. It's somewhat recent, 2023. In August, 2 former JP Morgan Chase & Company precious metal traders were sentenced to prison. They actually went to prison because they broke the law for engaging in a long-running market manipulation scheme, specifically spoofing. So you have a few key individuals. Actually, you have many key individuals because you have a lot of juniors in the department who gave information to the government in order to avoid prison sentences about their supervisors, what their supervisors were doing. So
don't trust anybody.
Don't trust anybody. So you have 2 key players, Greg Smith, who was the chief gold trader, and he would be sentenced to 2 years in prison and fined $50,000. And you have Michael Nowak, former head of the Global Precious Metals Desk, and he was sentenced to 1 year and 1 day, I don't know, 1 day, in prison and fined $35,000 between 2008 and 2016. I found the 2008 interesting because that was around the financial meltdown. Don't know how it's significant, but made a little, bell in my head. I was like, that's interesting. I wonder if there's any correlation there because they're looking for another market. You have the collapse of like the entire financial market and banks, and things are just a mess. So they try and make profit elsewhere, and they move into gold and silver. Just speculation on my part.
Right.
So Smith and Nowak engaged in spoofing, where they were placing large orders for precious metals, specifically for the futures contracts, with the intent to cancel them before execution to create a false impression of supply and demand. So the scheme involved tens of thousands of unlawful trading sequences, resulting in $10 million in losses to other market participants.
Right. They're basically stealing money from people when they do this kind of stuff.
So in 2022, both traders were convicted of multiple charges, including fraud, spoofing, and attempted market manipulation, all illegal. They were acquitted of racketeering and conspiracy charges.
See, another real-life conspiracy. They really do happen.
Spoofing was actually outlawed in 2010 under the Dodd-Frank Act.
Right.
That became illegal. Before then, it was perfectly legal. The convictions and sentences underscore regulatory efforts to maintain market integrity and deter manipulative trading practices. And a former precious metal trader who admitted to the market manipulation avoided prison with the government because he helped win convictions. If he had not helped win those convictions, if they'd been found not guilty, he actually would have gone to prison. So I'm guessing he was spilling the beans.
Right.
And his name was Christian Truntz. He spent 3 days testifying the year before that, so that would be 2022, in the trial, and he described for federal jurors, God, can you imagine being on that case? That was probably a really long case.
Yeah. Eyes getting all pasted over.
Oh,
from
God,
boredom.
as they talk about like futures and stuff. I mean, you'd have to have a very specific panel of jurors in order to do that kind of a case. Now that I think about it.
Well, and I think that's why they get away with this stuff so much, is that nobody really even understands what they're doing. If somebody's stealing money from you, but you don't even know it, how can you get mad about it, you know?
Well, I guess they found them guilty because it was a panel of jurors, and this guy testified for 3 days and explained everything to them. And they found these guys guilty. I could not find anywhere if they'd actually started to serve or where they were, their prison sentences.
Mm-hmm.
But you would guess it's one of the what's the quote from Office Space?
Which quote? There's so many good quotes
about the prison.
Oh yeah, pound me in the ass penitentiary or whatever.
Yeah, I'm guessing they didn't go there.
Yeah, no, I doubt it. In fact, these are probably wealthy and connected people. They probably were able to buy a presidential pardon, I'm guessing.
Yeah, I don't know. I didn't see anything else about them. That was it. I looked around.
Yeah.
I think that was it. They've fallen off the planet. Nobody cares. Newspapers aren't interested in reporting on them.
Mm-hmm.
That was it.
Huh. Interesting.
Yeah. So those are the big cases I wanted to touch on.
Right.
Which actually show that, yes, there is market manipulation. And you might say, oh, it was a few key players and the institutions didn't actually know, or there was oversight, or there wasn't enough inside regulation.
And that's, if you read about these guys that got convicted or that got in trouble, it's often sort of implied that they were rogue actors or that they were acting alone. But I don't believe for a minute that the higher ups in the company didn't know this was going on. I think that this goes all the way up to the top, allegedly. And, because Jamie Dimon definitely has a better lawyer than I do. But I believe that this goes all the way to the top of these companies. And I think they know what's going on. And I think that the penalties for their actions are so light that I think there's no incentive to ever stop doing this kind of thing.
Yeah, $50,000 and $35,000, that's like nothing.
It's nothing.
It's like nothing.
Yeah. And even the, what is it, 1 year in prison or whatever, probably they get to go to one of these white collar prisons, or they even get something like house arrest or something like that. That's like, yeah, dude, if I can make millions of dollars, yeah, I'll stay at home for a year. Fuck it. Hell yeah, I will. You give me how many millions of dollars are these people making off this stuff? Yeah, I'll definitely face that kind of a penalty for millions of dollars. It's like winning the lottery, basically.
Yeah. I was just looking up real quick, the Dodd-Frank Act. I hadn't heard of it before. Reduces the risk of financial institutions becoming too big to fail. That was the beginning of 2008, right? Everybody thought that banks were just too big to fail. And boy, were they wrong. So a lot of times when they pass these acts, it's just more oversight. Oh, we'll have more regulators. Oh, we'll have more oversight. And I just feel like it's all a big money go round. It's kind of like how politicians come from, positions of power. They're CEOs of these big companies who, and then they come into politics and you're like, but you can't take the CEO of PG&E and make him in charge of the Energy Commission. Well, yes, you can.
That's what they do.
That's what they do. And so it's kind of the same thing here. Who are these regulators? I would like to know. They're probably former JP Morgan and big banks, like their CEOs are probably who are becoming regulators, because that makes sense on some twisted level.
Well, you could make the argument that some of these industries are so complex that you couldn't just take somebody off the street and have them regulate these markets. Whether it's utilities like PG&E, look at I've seen a video about how our utility grids work. It is extremely complex. Or these financial markets, they're extremely complex. So I would not be qualified to regulate either of those. But on the other hand, do you think that if somebody retires from their industry, they no longer are friends with anybody? They no longer have any connections to anybody in those markets? So often you have people who are regulating the industries they come from, that they're still connected to, and they don't actually go after people for, stuff that they're doing that's shenanigans.
So this is interesting. This is criticism versus praise for the Dodd Act. So praise is that it will prevent another financial meltdown and improves transparency, consumer protection, and oversight. Those all sound like great things.
Yeah.
But of course, people in the banking world say, no, it's excessive. It's a regulatory burden, particularly on smaller financial institutions and community banks, and it's limiting and stifling economic growth.
Right. That's how they always phrase it, right?
Mm-hmm.
Say regulation is bad. It costs us money. Well, that might be true, but it also regulation prevents shenanigans too, that hurts people.
Shenanigans. I call shenanigans.
Yeah, for sure.
Okay, well, that's what I have as far as legal proceedings and cases go.
Okay, I just had one more thing before we wrap it up here. I mentioned earlier, and I looked it up, and this was, remember I mentioned that that supposedly a president was suppressing the price. Okay, so I found this article here that's talking, this is from moneymetals.com, and it's talking about basically, it's the article is titled, Suppressing Silver Prices Has Been Official U.S. Policy Since 1965. So that goes back farther than what we're talking. However, remember when I mentioned the price of silver has been basically the same for 100 years with some spikes here and there, but it hasn't really gone up that much. So it opens talking about a July 18th edition of the Gold Newsletter where publisher Brian London says, I'm not the kind of conspiracy buff that many of my friends in the industry are, but it's hard to look at silver and not see some hidden hands at work, especially considering who holds so much of the metal in both physical and paper forms while acting as custodian for the biggest silver exchange traded fund. He's talking about SLV. So, I mean, that just, I just want to mention there's so much to this topic we didn't get a chance to talk about yet, about who the players are, who's holding what, who's trading what, like those kinds of details, but there's just really too much to talk about in one episode or two episodes. So if you're interested, go ahead and read more about this topic. There is so much to it. Like we only scratched the surface on this one. Like I said, we could easily do 10 episodes or more on this for sure. If we wanted to look at specific players like JP Morgan Chase or whatever. Anyways, the article continues, why anyone would invest in silver or other precious and monetary metals with JP Morgan Chase can be explained only by ignorance. So in other words, they're making the argument that these are heavily manipulated markets. And we touched on gold. The gold market, there is evidence that it's manipulated in a similar fashion, but
higher instead of...
Yeah, well, no, not higher. The price has been suppressed, but there's just too much to talk about, too much to look into. So you didn't have time to look into that as well. You've got to stay focused, right?
Focus, Anderson. Focus.
Yeah, focus. In the last decade, the bank, that's JP Morgan, has pled guilty to 5 felonies and has paid more than $1 billion in government fines and civil lawsuit settlements, including a fine of $920 million for manipulation of the monetary and metals markets by some of its traders. And like I said, if you branch out from just the silver market, there's a lot more to this. And it has a link to an article here from justice.gov. I think that's one of the articles you discussed. Mm-hmm. Silver market manipulation has long been bigger than even JP Morgan Chase. Indeed, silver price suppression has been a U.S. government policy since President Lyndon B. Johnson signed the Coinage Act of 1965, which removed silver from the country's money. Signing the act into law, Johnson proclaimed, if anybody has any idea of hoarding our silver coins, let me say this. Treasury has a lot of silver on hand, and it can be and it will be used to keep the price of silver in line with its value in our present silver coin. There will be no profit in holding them out of circulation for the value of their silver content. In other words, what he's saying there is that nobody should keep silver as a storage of value. If you try to do that, I will release our silver reserves and prevent you from profiting on silver. Like we said, why would President Johnson not want the price of silver to go up? This is proof that our government has suppressed the price of silver, that they're afraid of the price of silver going up. This goes all the way back to 1965. Like we talked about at the very beginning, when we're talking about conspiracies, this pretty much proves the conspiracy that they want to suppress the price of silver as a store of value, and it relates back to other things like the Spanish thing in the 1600s. I don't know. Like I said, there's so much to this case, and I don't really want to go to too much detail of this one, but we have proof here of silver price manipulation by the U.S. government. And there's evidence that other governments who hold silver or that want to manipulate the silver down, those are some of the big players who use financial institutions like SLV or JP Morgan Chase or COMEX or whatever. They work through these entities to suppress the price, but it might be that a big part of the price suppression is actually government entities. And that's a whole other episode, so I don't want to get into it too much. But like I said, there's so much to this. And here we have a quote of something that President Johnson actually said. President Johnson said that we're manipulating the price of silver downwards so that you cannot make money on it, so that we can keep the price low. And we're going to release our reserves to do that. So I just wanted to end on that fascinating tidbit there. All right. Any final thoughts, Agent Ether?
Well, I feel like in conclusion.
How could you conclude something like this? But let's go for it.
Well, in conclusion, I think that institutions and our government might be, allegedly, I'm always a little skeptical, more skeptical than you are, but might be suppressing silver for a combination of economic, financial, and geopolitical reasons.
Right.
I don't think it's just one thing, in other words.
I think there might be multiple actors suppressing the price for their own reasons.
Yeah. And maybe collaborating together, maybe not.
Yeah.
Maybe unofficially collaborating together, kind of a wink, wink, nudge, nudge behind the scenes sort of a thing.
Right. Well, it's like, you go to the grocery store and you look at the price of Pepsi and Coke. They don't have to have a backroom meeting to set their prices at exactly the same thing.
Right.
They can just tell their accountants, that's how oligopolies work. Not a monopoly, but an oligopoly is that the prices somehow end up being all the same because it's not worth it for them to compete with each other. They'll make more money by not. So it's like that, where these backroom participants, they don't have to meet in person.
Yeah.
They know, okay, this guy's doing this. I don't even have to ever meet him in person, but we both want the same thing. So we could just sort of do the same thing and it all works out.
It all works out, except when occasionally these big banks and institutions get sued.
Yeah.
They're so blatant about it and they're so criminal about it.
Yeah.
That the Justice Department kind of has to do something like, well, you got found out. There was a whistleblower.
Yeah.
Right? In this case, the JP Morgan one, there was a whistleblower. So we kind of have to do something about it. We don't want to, but we're gonna.
Well, and they do a penalty that seems like a lot of money to the average person. What is it, 60 million?
60.4.
Like,
yeah.
That sounds like so much money to the average person that somebody reading that in the New York Times or whatever, they're gonna think to themselves, all right, you got them. But if you look at the totality of the manipulation, that's just a drop in the bucket. And it's almost like they're giving them a free pass. Okay, we have to penalize you something so that it feels like we're doing something. But if they really wanted to prevent this from going on in the future, what they would actually do is they would look at the evidence of the crimes and they would say, okay, we can estimate that they made this amount of money, so we're going to penalize them the amount of money that they made by doing this, which would be a number far, far greater than $60 million or whatever it was. And that would be a real deterrent. But they don't. It's just a drop in the bucket.
So I just looked this up, 2023, Bloomberg, JP Morgan Chase achieved a record net income of $49.6 billion in profit, marking a 32% increase from the previous year.
Yeah. So these banks are making insane profits, and I'm sure they're providing goods and services, that they're doing important stuff to the economy. That's why they're making money. Yeah, they're making a lot of money.
Yeah.
So
I just wanted to throw that in.
Yeah, just throw that out there.
Throw that out there. Throw out a dollar amount. It's all-time high after boosting buybacks and dividends.
Yeah, all-time high. They seem to make more money every year, and yet the average person is struggling.
Yeah.
Go figure. My final thoughts are, when I first saw this case, I came across it somewhere in the conspiracy boards or whatever. I mean, I read through a lot of this stuff on occasion and, peruse the boards. And I saw it at first. I'm like, that's probably bullshit. Come on, you couldn't actually manipulate something at this level. But it turns out it appears, allegedly, that the silver price manipulation is real and that the price has been massively suppressed for a long time, for decades and decades, possibly 100 years.
That's insane.
Yeah, and there are various reasons for it, and it appears that there are major big players and they all benefit. I don't know. I feel like this is one of those episodes where I want to do so much more on it, but I don't think our listeners necessarily want to hear.
Yeah, that's probably enough for our listeners.
Yeah, I don't think people want to hear 20 hours of us talking about the silver market as much as I would like to do it. So if you're interested, read up more on the topic. There's a lot more to it, but that's pretty much what we got for you this time. I am now convinced that there is silver market manipulation. All right. Well, I think that's pretty much all we have to say for this one. I guess, right?
I guess so.
I guess so. I feel like there's so much we didn't talk about. I feel like I want to go more, but let's not. Let's just end it here.
I thought it was pretty good.
Yeah, it was pretty good summary, pretty good overview of what's going on. So, all right. Well, thank you guys. Thank you everybody so much for listening. And until next time,
Keep it strange.